The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. That's number one. Number two is my service. It's called the Opening Call. Very comprehensive look at the markets every day. Just a really detailed analysis of where we are, what we're looking at, how you can use the volatility index, the short-term trading index, how you can use all these different things to your advantage, what the parameters are, why we're looking at them, what's the relationship to the market of these sentiment indicators, and what are the levels of support and resistance? What can you expect each day? And I do it for many indexes that are very important indexes, but mostly I do it with the Dow, and then I also show, let me just show you right here. This is the quintiles on the left, upper left, 120-minute Dow chart at 16:030 yesterday. It made a peak E. That has been tested but not broken yet. And as a result, there's a high-level consolidation that's unfolding. That's number one. I give the parameters, and I also explain what we're looking at, where the 120-minute chart will go from a sell signal, if there is one, to a sell mode. I explain how the volatility index is working. Over here, you've got this pattern that I call the Chapman Wave Stalk Leg Formation. And I explained it this morning in very great detail in my Dow chart that I usually show. That's this particular chart right here. That's a separate chart that also has the indicators, the MACD and stochastic. What it means, how we're working at it, the whole panoply of techniques that I put together, most of them proprietary. Certainly the Chapman Wave Stalk Leg Formation, where you get the long leg, you get the body, you get the neck, perhaps you get the head and the beak. We'll see what happens. That's what could unfold. Number one. Number two is with the lettering. The notation is absolutely, you'll not find it anywhere. I've never seen it before. And I suspect that it'll just be one of those things that one day in the history book, someone will pick it up and say, hey, look at this. Wow, 50 years, 60 years ago, somebody was using this. Let's see what we can do with it. And then maybe they'll take it to a whole new level. I won't be around. I will not know. So let's look at the market as I'm seeing it right now. Right here, the most important index I'm looking at is the volatility index. I drew this H pattern in my CD introducing the Chapman Wave methodology. I spent a lot of time on the H pattern in my webinars. I spent a lot of time on the H pattern in my Master Trader series. I spent a lot of time on that. Why? Because there's a pattern that says there are three ways of looking at it. If you don't break the left side low bar, it says you can bounce to a certain level. If you touch it and go under it, but close above it, that same bar closes above it, or maybe one bar later it closes above it with a particular kind of candle formation, that could be very positive and say you can at least bounce to the next left side arch high. If you close under it, there's a problem. And what happens is if you close under it, it says, be careful. You might revisit the little arch formation to say, hi, everybody. I'm just coming to say I didn't get a chance to say goodbye to everybody. Goodbye. And then it'll be going down. But there's a pattern that I'm also looking at, a number of patterns, actually. In this case, there's a declining wedge formation in the 120-minute chart of the VIX. This is the $VIX.X. That's how I get it. Yeah, many people have different ways of looking at it. Of getting it on their software, on their platform. And in this 120-minute chart, you can see what I've got, a whole bunch of techniques. Here's the declining line. Here's the support line. There's a doji candle at 11.99, the most recent low. 11.99 says you can rally, but 11.45, 11.43, oh, that was silly. Peak A, Peak B. I missed it after all that, and I sent it to subscribers this morning. Sorry, subscribers, it's actually Leg C unfolding right now. And I show the diagonal of the Chapman wave inside wedge. This dashed pink line is the diagonal inside wedge projection line. And it says that there is a chance that if the volatility index continues to rise, and yesterday it was rising even as the market went to all-time highs above 16,000, and then it even rose more as the market pulled back. Today it's been rising as well. It's up 14 cents at 13.24, up 1.07%. Not a big deal, but in the waveform it's gone from a buy signal to a buy mode, and it says it should go to at least a D. It also says that if this pattern was to continue, and today we closed down instead of up, as many people think, then there's a pattern that says by, what's the day, the 19th? Within a couple of days, we could be testing the 1414 area. If we even get close to that, then 1432 is the 9-period exponential moving average. If it fails, it'll close under 1280 by the end of the day, today or tomorrow. And that'll say, uh-oh, be careful, false breakout. Okay, now let's look at the weekly chart. Friday's coming up, so we've got another 3.5 sessions to go. This is way too early to even think of them, of talking about the weekly chart as if it's closed. No, this is just the weekly chart that says, thus far, you've got close to testing 1354. That's the 9-period exponential moving average. The high so far is 1341. So it's 13 cents away, number one. Number two is, if on Friday it closes above 1354, especially if it gets towards the 1397 level, that'll be the first time that the VIX is closed above the 9-period exponential moving average since it broke down from that big spike to the 21 area in somewhere in October, and then it started pulling back. Not only that, as I was mentioning yesterday, the volatility index has got 1, 2, 3, 4, 5. Sometimes it takes 4 to 5 sessions of a down move before it has a very nice spring to the upside. Number one. Number two is that spring to the upside doesn't guarantee that it's going to go to another high up in the 20s. It just says it's a rally, and that rally could even fail and produce a wick like it has many times before. So the day is young, the week is young, the month is young if I'm looking at the monthly chart, because that's showing no signs yet at all of strength. Now let's continue with the daily chart of the VIX index. The VIX says that arch pattern that's running right now has seen the stochastic go from the single digits to over 20% today. I wanted that. That's number one. Number two is that the MACD is crossing positive. That's number two. Number three is you've got price movement. Number four, for anything more than a buy signal, which it's in right now, it's a buy signal is just the start of something. To get to a buy mode, I will not even get close to a buy mode in the volatility index unless it can close above the most important high of 1414 that was made on the 7th of November. And even then, this particular methodology says, having closed below the arch formation on the left side low, that's the low 1234. Let me type that in, 1234. 1234, back in October, you need to get a full-blown buy signal that goes to a buy mode in the technicals to be able to surpass 1436, which is the major high. But if you do break that, 1479 on the daily chart would be the next level up. So we've got very specific levels to watch. A breakdown under 1280 will say, uh-oh, an arch to an M failure formation, nothing. The market is still going to go higher. Now, this is most important for me. Have a sip of tea. Let's run the numbers and I'll explain what I'm looking at. In the Dow chart, the Dow is up 4 at 50,981. It actually ran above 16,000 again today. It went to 16,025. Yesterday's high was 16,030.28. I'm going to type that in. 16,030.28. 16,942.28. The reason why I'm putting it in with the decimal is that a move above 16,030.28 not only extends this move up, it says there's a much greater chance that this is now going to be a leg B instead of an F, number one. And number two, it says for this to be a peak F to match the previous high of peak F back on the 2nd of August at 15,658, you need to see in the Dow a close way below yesterday's low bar. Yesterday's low was 15,942. And within, I would say by Friday, at Friday's close, the Dow should close below 15,856. And I would even say it should close decisively below 15,856 at about 15,820 to 15,000, under 15,800. That's the way I'm looking at it. If it breaks up, then you can be looking at the 16,050, 16,070 area. I think it's going to have a tough time. All right, so now let's look at this. The S&P has made, I'm calling this, at least for now, a peak F. If it goes 1 penny above 17, I better put that in as well, 1795.51. 1795.51. If it goes 1795.52 today or tomorrow, I have to consider that it's recycled, and this really is an A, B, C, and that'll be going to leg D, and therefore, once again, you've got to be somewhat careful. So it'll be bullish for the Dow because the Dow is likely to have recycled to, what did I say it was, a leg C, INDU? Yeah, a leg C. If there's no new high today, but there is one tomorrow, the next day, and it doesn't break down. So the S&P has decisive connotations as far as I'm concerned because it's been lagging the Dow just the last day or so. Why am I having trouble here? SPX.X. There it is. And it's much closer to 1782, the 9-period exponential moving average. I don't have a signal yet in the crossover of the moving averages. I do have a signal in the on-balance volume. And on-balance volume is often a day ahead. And it says, be careful here, because what I mentioned yesterday is I want to see a pullback, a quiet pullback. I don't want any news. I was so upset when I saw the Dow decline. I was very pleased that it declined because that's what I was expecting. But I was really upset that it declined on news. And that news was that Carl Icahn has said he's very nervous about the market and thinks it's overbought. Well, this guy's great on stocks. Let me tell you, as far as timing the market is concerned, I don't know about him being a timer for the market. He's a timer for stocks, for sure. There's no question about that. So I was still upset because if it does decline, they'll call it he's.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. So let's go on this. S&P, 1782 critical level of support. 1795, 52 starts, another leg up. And at this particular point, my analysis says, based on the 120-minute chart. Now, the technique that I use of identifying peaks, mostly Ds that are very important. You can go to E and F and even the G, but the Ds, that's what I teach. That's the core of the whole thing. Look how many times the S&P has gone to a D, and then maybe it's gone to an E, but it always goes to a D. So it goes to D once from the low of the 9th of October at 11:30 in the morning, Eastern Time. So it goes peak D, then a quick E, on the 15th, pulls back, goes ABCD, 22nd of October. 4 higher peaks. That's all you need. It's the simplest technique in the entire world. Then it goes to a D, and then it still goes E and F because it didn't go underneath the 9-period moving average, but it got you to the D. So that's 1, 2, 3. Pulls back, peak F, starts a brand new one. It goes ABCD, 1, 2, 3, 4. It does another ABCD, 5 ABCDs. 6. 1, 2, 3, 4. 1, 2, 3, 4, 5 ABCDs. So now what we've got is that this particular 120-minute chart pattern shows very strong technical decline. Price hasn't moved down that much yet. But there's a candle that I'm watching, long-legged doji. It says that it closed below, on the 120-minute chart, below 1785.92. That's a close below that, will make the 1785.92 will make the 1790 resistance very strong. A close above in the next bar or two, it takes you to about 2 o'clock. 1795.51 says that ugly candle, the gap down candle from starting last night, 2:30 in the morning, this morning at 2:30, makes 1800 very, very strong resistance. But in the meantime, what I'm looking at is that this is just the quiet start to some kind of, I want a quiet start to a decline. That starts to give me a potential sell signal. You'll only start to get the sell mode if there's a very, very strong decline that includes the weekly chart going probably to a sell signal. It's going to take quite a lot to do. Number one. Number two is that I need bad news to continue the move down, because it's not going to keep going down. Initially it does, but eventually you've got to have bad news to keep fueling the downside activity. So there's weakness. The Dow is down 3 points. The S&P is down 92. Now let's just go on. We're going to go to the QQQ series. Look, the 120-minute chart takes you to a peak E. The last one was a peak D double top at 83.49. Pulls back to about the 81.37 level. Goes to the doji candle high of peak E at 84.11. 11.30 yesterday. Turns around, and now it's pulling back. It's under the 9-period moving average. That makes the 9 EMA 83.45. The resistance is trading at 83.20 right now, up 6 cents. So still holding quite well. All the markets are really holding quite well if this is going to garner downside activity. I don't want to see the VIX start to rally without the market actually pulling back, because what it says is when the volatility index starts to come back again to the 12s or even the 11s, you've got a lot of upside going on. And I would like to see a 3 to a 5 or maybe a 3 to 7 day pullback going into next week, just before Thanksgiving, maybe the Friday of Thanksgiving, which is very often a really good day. Maybe that's the pickup to turn around. Then we rally into the end of December. I don't know. That's the way I'm thinking of it right now. Look at this. That's the QQQ. So the Qs have 80. I'd make it 82. The 82.50 area needs to hold. Otherwise, it's going to retest the recent lows in the 81.30s. A break above 84.11 starts leg E, and that really improves the weekly chart, because the weekly chart, at this point, I'm calling it leg F. I don't see any reason why I should change it. And the monthly is in leg E. So this is going to be very interesting what happens here. We might see the very great high techs start to take on some water. Just real quickly, gold, let me just tell you right now, give you the numbers. December gold up $1.19. A lousy chart, 1284 is the strong 9-period exponential moving average resistance. It's trying to get a bounce with an H pattern here. Unless it can break above 1286. In the next 2-3 days, I just think it's making another little arch pattern that goes to an M pattern. Then we've got, I'm looking around, the TLT bonds. Right now, bonds are down 46 at 104.90 on the TLT. Holding okay, but that weekly chart says that's a really important pattern. You need to see 106.50 real soon to start making your way back to the 108, 109s. And I'll be right back with Garo in Newport Beach, California, straight after this break.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Conditions Hour, and we're up 7 in the Dow, down a tad in the S&P, and we're going to go straight to Gara in Newport Beach. Gara, how are you?
Very good. And you, sir?
Very well, thank you.
Okay. Today I'm going to talk about ICE. ICE. I bought that on Friday. I bought 300 shares at $200, where it gave me the buy signal at 30 minutes.
Right.
And yesterday I sold it at $204 at the opening, the first candle.
Okay.
I want to see. Yes, go ahead.
And now it's trading at 205.15. Let me just explain something that when we were looking at this, in my work, it's really important if you identify a particular low that is what I call the most identifiable low bar. In this case, ICE, which is Intercontinental Exchange Inc., trading at 205.15 up $1.98, made a low on the 10th of October, on the 30th of October, at 190.47. It went up to on the 1st of November. It went to 196.31. I usually call that a gray A, meaning it is under the previous high, which got the down candle at 198.53, peak E, pull back, and the moment it breaks above 198.53, there's a chance that this could be, yes, it could be F, but it's F/B. Most importantly, because of the way it held above the 9-period moving average, I called it a B, and it went to a C So that was a B on the 5th at 200.87, pulls back, just barely, it's just like one day, and then it breaks out, goes to leg C at 205.80 on the 11th, pulls back, holds the 9-period moving average, and goes under it, closes above it, goes under it again. Today is Tuesday, so you were looking at it on Friday the 15th with a low of 199 round number, but the low was the day before at 196.75.
Right.
Most importantly, what I'd be looking at, and one of the things that I'd be looking at, and one of the reasons why I think when you get you use a beautiful technique to be able to enter stocks, and I know that you like the triple-digit stocks because you only want a few points, but you want to get a few points with a few hundred shares. So now looking at this, that leg C at 205.80 on the 11th says that if it goes to 205.81, it'll make the leg D. And that's where I would have said, if you could hold it a little bit, I would hold it long enough to be able to go 1 penny above 205.81. You can either take it right off, or, because it's usually such a big move, I would raise my stop on the remaining position so that no way you get taken out for less than you got out of your original position. This should be a bonus, and it's also at the same time, it's a way of taking your technique maybe to just like a little step further, and a little step further you'll see it can actually give you an extra point or maybe even a little more. So you're out, that's fine, you got a technique, but what I'm looking at is that ICE will go to 205.81. In the 120-minute chart, it is 56, 90, This is A, B. Is that already C? 204.40. Yeah, it is. This is leg D. It is really close. It'll probably happen today that it has a little bit more of a pop-up. The high today was 205.52. Either today or tomorrow, you should try for 205.81 or higher, and then it becomes vulnerable to some kind of a pullback. But I think that you did exactly the right thing. Your technique, the way you do it, you enter using the parabolic SAR, and a break above it, you start entering. And what you have done, I think now, is you've used the shorter time frame as your lead in, right? You've gone to the 30-minute chart now, correct?
Yes, absolutely. Yes,
right.
Sir.
Okay, so now you've modified it so that your entry point is a tad quicker than if you were waiting for the 60-minute or the daily chart. That's number one. That's a great benefit. And number two is that when you have a chance of looking at charts and you're able to label them in a very simple way, I mean, there's just nothing to this. You go to the low of the, what did I say? It was October the 30th at 190.47, peak A, peak B, peak C. If it's going to rally and rally strongly, it should go to at least a D, and that's where I would either exit the trade or I would raise my stop really tight so that the moment it goes 1 penny above that peak C, I've got very little wriggle room, because very often as it takes out the peak C, it pushes quite a bit higher, and that's what we haven't gone through it yet, so I'm suspecting that this is going to try to touch, just get into the 206s, if it does that at all. If it breaks above 205.81, it's a good chance it'll just touch 206, and then it becomes a little bit vulnerable. I like it. The fact that you're just modifying your technique a tad is starting to give you incremental, vastly improved capital gain. At the same time, it's using your technique without really doing much to modify it. The only thing is you've taken a shorter time frame, and all I'm saying is that in the move up, because most of the time when you get it, you really do see, not always, but a majority of the time, you're looking at a good 4 to 5 points of an upside move, of which you want to get 3 to maybe 4. So
yeah, that's enough for me. Yeah,
and that's exactly that. I'm not going to say another word. You're doing fantastically. The only thing was that getting that entry point a little quicker, using exactly the same technique, just gives you that edge. So that's great. Hey, I have to congratulate you. You really traded this very well. And in a market like this that is really starting to knock the big triple-digit stocks down quite a bit, each one slowly but surely, you picked one that's really acting very well. Congratulations. And I love that technique.
Mr. Basil, one more request. Whenever you have time, if you have time today, the weekly chart on Facebook is horrible. It's right at the sweet point to get shorted. I want to short 2,000 to 3,000 shares of that Facebook. If you have the time and see if I'm right or where is the time to short it on a large, huge quantity, if you would explain that, I will hear that from the radio anytime today. Is it possible?
I'm going to do that. I'll do that with you right now because I have a request in the den. Exactly that. To have a look at Facebook, having pulled back, what would be the level to be looking at for the retracement on the way down?
Right,
and
right.
Some people have it at much lower prices and might want to add. So let's do this together. What I'm looking at here, let me go to Facebook. FB is the symbol, 46.40, up 57 cents right now. My technique, very simple technique, doesn't always work, but it works a lot of the time, looks towards picking out the peak Ds. And if you go from the low bar, well, let me just keep going back here to show something. The very low doji candle back at 22.67 on the 6th of June, 22.67. It went peak ABCD, pull back, and then there was this, you remember that was when, what's his name? I can see him right now. Zuckerberg, whatever his name is, came in and he said, yeah, we're doing things right, and it gapped up, and what did it do? It went to peak A, B, C, but then it went to peak C1 and C2. You don't have to worry about that. I'm just talking about it because there are a number of people who do the Chapman wave methodology, right. And in my upcoming Master Trader series in December, I'll be talking a lot more about the peak C1 and C2, a slight variation of my technique where it just misses making the D, but it has all the requisites. The MACD fails, the stochastic fails, on balance fails, everything's there, and you've got to learn how to use that. Well, it pulls back sharply as if it was peak D, and then it goes big A, B, C, D. It goes to an F right on the, it's walking the 9-period moving average. On the 13th of September, goes to 45.08, pulls back for a day, starts another rally, goes to 51.63, peak D. That is 63. 51.60, I'm sorry, the 30th of September, pulls back, has a sudden spike to 51, where was it? 51.29, fails, pulls back, starts another move up, and that move is what I call a right arm extension. It's really like what I call a rogue wave. It pops up to 54.83, peak E, and then it pulls back. That was, I like to look at markets and talk about internal lows and residual lows, internal highs and residual highs. I suspect that the 51.60 high of the 30th of September was an internal high, and then there was a news event that made that sudden spike to 54.83 on the 18th of September, with a 2-bar reversal of 54.81 the next day, and now it's pulling back, and it keeps trying to find support. Now, one of the things that's really important is if you look to the left side, the low bar of the 9th of September at 45.26 is going to be very, very important for two reasons. One is the MACD is still coming down, but it's making a little soft W formation, which says, hey, you've just had an arch formation, the low bar of 45.73 on the 11th of November, and the low bar today of 45.76, which is 3 cents higher, and yesterday's low of 45.80. Got to watch this real closely. There is a chance, based on the 120-minute chart, that you could, in fact, get a bounce from here. but the arch formation in the 120 went peak A, peak B minus, and it's always a negative when a B or a C fails. That says, be careful, you can go all the way back to the low. Well, we've done that. So here's the question. Now the question is for, if anybody is positive on Facebook, I would recommend having a little bit of patience. I don't yet have any sign to say that there could be a bounce of consequence, a bounce but not a bounce of consequence. A bounce of consequence isn't from 46.45 to 47.66, the 9-period moving average. It is to 49.57 was the high of the 15th. That's not good enough. I would say it has to take out 50.45, the high of the 6th of November. Can it do that? As the stochastic stands right now, and the MACD, it says not just yet, number one. Number two, right. The peak E top that was made in the daily chart has made a trough A, B, C, and if it goes to trough D, sometimes you can get a bit of a bounce from the trough D. But I'm looking at the weekly chart. The weekly chart, the week hasn't finished, but so far it looks like the stochastic wants to stay down below 80%. It's at 69%. And the MACD is just crossing negative right now. But looking out further, the monthly chart is very positive. It's in leg B, probably a peak B. Normally, IPOs go to at least a D in a bull market, and so far we are still in a bull market. So I'm doing two things. One is, my big suggestion here is that you're looking for the same 2 to 3 points, but this time you want to go heavier. I don't know how many times you go heavier, because normally it's just 200-300 shares. At this point, having gone from 54.83 to 46, that's an 8-point decline. I'd be a little concerned about being too heavy when there's a chance for a bounce. So the safest way is to either have patience, and if it doesn't work out, it just doesn't work out, but to wait for a bounce from 46.49 to between 47.67 to 48.30.
Yes.
And as soon as it curves over, I don't want to buy the rally. In your case, I want to buy it as it rolls over. So I want to see it get there, and as it's about to roll over, you can hit it and you can put a stop just above the arch formation, the recent high that it just made, because you want to do it as it's turning down. You can put a very tight stop, 50, 60 cents, something like that. Why? Because on the next level, if it arches over and starts to break down, that should take it immediately to the 45 to 44, even 43 area.
Absolutely.
So to do that amount of shares, I would not short it here. Even if you're right and it just takes off on the downside from here, your risk reward is that there could be a bounce. I want the bounce and short it after the bounce. Now, for those who are looking to go long, the candle that I'm looking at, what I call the Chapman Wave Roman candle, with a low of 45.26 and the high of 51.29, the week of October the 11th, how it handles 45 is going to be really important. My suspicion is this is really not the Facebook period right now. This is more like the Amazon and other stocks that has something to do with the holiday season. I think Facebook's going to be coming down a little bit longer. So I'd be looking in the 44s to the 42s as a potential buy. On the downside, that's my target on the downside. Hope that helps you, Garo.
Yes, sir. I just thank you so much. Thank you, sir.
Thank you very much. I'll be right back. Basil Chapman, tight conditions are good. One segment to go. The Dow is down 8, S&P's down 2.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back. And the Dow is S&P's down 1. I have to tell you, for this to get to a sell signal and to be a more of a time and price move to the downside, so far, this is kind of okay. That's the reason why I'm opening call. I've made it absolutely imperative that I've tried to identify stocks, mostly stocks. Yeah, we've gone for indexes, but mostly stocks, because that's the way I think you're going to be able to survive very well this particular whippy phase that I'm expecting coming up. So let's go to our next caller. We've got Brian in Jackson, Mississippi. Hi, Brian. How are you?
Hey, Basil, thanks for taking my call. And I know there's not much time, so I'll just get to the point of what I called about. I went short Walmart this morning via puts, January 80 puts, and I'm looking to write it down to about 75. I just wanted your thoughts on that.
So you got January. Okay, January is not bad. You've got at least 6 or 8 weeks. So what we're looking at, folks, Walmart WMT trading at 79.06, down 16 cents. Now, there's a very interesting chart formation. Let me just look at the monthly chart. has been walking the 9-period moving average. I have it at a peak F at 79.96. But if it was to go 1 penny above that to 79.97, I don't know whether to call that a B or a G, but I've had a little trouble with this one. And there's only, sorry, you want to say what?
Oh, I'm sorry. That long candle that was on the 17th, I guess that was earning today, I guess.
Right.
Yeah.
So
it's gone straight up from there, but go ahead, I'm sorry.
What I wanted to say before we run out of time is that there's a declining W formation in the weekly chart. I've got it as an A, but it's called a gray A. Why? Because it's underneath the previous high, and the previous high was at a peak D at 79.96. That would tell me that if it was because the buy signal to buy mode started way back at 67.37, January of 2013, the week of the 4th, this could be an E if it goes to a new high, E/A or E/B. It depends on how it does that. But what I'm looking at that's even more important is that the weekly chart stochastics at 83%, almost 84%. The monthly chart is not that great, which means that the price is going up without the technicals confirming yet in the monthly, but the weekly is good. And the daily, I'm going to show you something. It's in a channel, a very clear channel, from the low bar of 71.51 on the 7th of October. It's gone peak ABCD, pulls back for 3 sessions, then it goes peak ABCD, and now it's a high-level consolidation. See, if you're looking at January for the put position, I'm fine with that because I think that we could have some whippy action and that it could still pull back to the 77s, maybe even the 76s, just like you want, and then it could still go on higher if the weekly chart and monthly chart is really going to only be a leg B and not failed here. If it doesn't take out 79.96 but closes the month, before it does that, it closes the month and goes under 75, they could say, Walmart's in much more serious trouble. Your January puts would look fantastic. Okay, I'm going to do this. I think you're in the right, you might be a tad early, but I think you're in the right position, number one. Number two is, you're not in the right position if on Friday it closes above at 79.06 right now. It closes above 80.50 on Friday. I'd say at least in the shorter term, you're going to have to hold tight because it's going to try to rally before it pulls back. So you're in the position. There's not much you can do. I think you're going to be okay in the end. I do see a sharp slide to cover that candle of 4 days ago, but it might just go a little further before then. I'm going to look at it again maybe tomorrow, but in the meantime, you're in the position. Let's just watch it closely. Thanks so much for calling, Brian. Folks, my service is the opening call. Don't forget, front page of TFNN. Check it out. Stay tuned for the Options Hour, and I'll be back later with Tom.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.